Yo guys, good morning. Today is Saturday, August the 29th. Welcome to the show. Hope everybody's enjoying their weekend. Today we're going to take a look at something very simple, but I think is fundamental, especially for new traders, to understand the concept of. And I think it can really help with the first steps to learning to trade. So what that is we're going to be looking at supports and resistances, how to find them, how to trade them. And I think it's going to be a good experience for everybody. So thanks for joining, everybody. 30 watching. Everybody's still waking up. But we're probably just going to hop into it anyway. The last few days have been not super exciting. So I've actually really been enjoying doing these little mini lesson type things. And I hope you guys have been too. So we'll get right into it. I'm getting alerts that my stream is live. Awesome, thanks. So on every time frame, we can identify areas, price values, where price action is likely to find support below or resistance above. Something important to remember is that support can only ever be below price. Resistance can only ever be above price. The simplest way to begin looking for these would be, I zoomed out here, we're on the 1 year chart, 12-month chart. The simplest way is to look for areas where price has bounced either off support or was rejected by resistance. So now we're zoomed out to the yearly. There's not, the farther out you are, and of course the less chart history you have, the less of these are going to be able to identify. So being this zoomed out, we're not going to be able to find too many. But I recommend everyone, when they do this, when you open a new chart and you look to identify where the supports and resistances are, I recommend that everyone zoom out pretty much as much as they can to start that way. So we can see back here, we have back to January 2020, we have 2 yearly candles that closed and opened at $4.50, something like that. So this would be a possible support, but we'll get into more recents. So 13, we see yearly candle closed and opened at 716. That could possibly have been a resistance at the time. You see price rejected, came down, and then once it was able to retake that resistance, you saw a move up. So now actually more relevant information. I zoomed out to the yearly. We have that same setup. We have a yearly candle closed and opened right here, about 14,000. The next candle, we even see that in 2019, price was able to push up all the way to the yearly resistance, which is currently resistance because it is above us, all the way up, and then was rejected back down, closing 7,100. So that pretty much confirms here on the yearly that 14,000 is our yearly resistance currently. So I'm gonna zoom in a little more so we can get a little more data here. Let's take it down to 6 months. 6 months, we see the same thing. We have a support here, 3,600. As we see that price came down, bounced, engulfed the previous candle, and moved back up. We have the same setup where we have price was rejected, 10,700, moved back down. So we potentially have a 6 month support, 6 month resistance, but since we are above that 6 month resistance now, we can consider that support, which gives us a trading range. So I already added these here, but as we zoom in more, I'm going to manually put them up for you so you can see how that works on TradingView. 13,880 we've identified as our yearly resistance. 7,130-ish, a 6-month support. Let's get a little closer, because there's very little to do here on the on these bigger time frames, but it's important because while there may not be a lot to look at when you're so zoomed out, these are very important values. These are going to be critical price levels where the market is likely to provide resistance or support. So the 1 month here gets a little better. We can see that yearly and monthly support, or resistance, I'm sorry. We can see that that's unchanged. We see basically a perfect touch to it back in June of 2019. What we also see now that we're zoomed in more is that there's other possible levels. And this is what we're looking for, because this is going to be valuable information. So we see this level here, okay, 10,700. 10,500 was a big deal for the last year. You can see that price in this range was traded often, but often was rejected. I'll put this up for you. Okay, we can see here all the way back in 2018 that this was a pretty critical level. We have 2 wicks that were painted above this 2,000 or 10,500 to 10,700 area. Price was rejected, pushed us down, and then even on the rally starting in April 2019, we saw price move back to that level, and at that time that would have been resistance. It was able to push above it, but the candle close was not. And we see that was true for the next month, and the next month, and the next month. Because no candles were able to close in that zone, we can consider this a pretty important area, a pretty important zone of price action. It wasn't until July in 2020 that a candle was able to close again above it. On that monthly close, because it closed above this area, it was able to flip that resistance potentially into support. And so that's an important element of support and resistance. Is that what is originally resistance, when it is broken and back tested, is flipped to support. This is also true in the opposite. So if price on the monthly here were to sell off greatly, come back and touch that support again and reject, so if we were to see something like this, then we would again flip this support to resistance. So for now, it is our support. It is the support on the monthly, as evidenced by all of this price action and an inability to close a candle above it. We're going to go a little deeper into the weekly. And on the weekly, we're seeing a pretty similar response to this. We do have candle closes above it and below it, but that's why I consider that a monthly support. On the weekly, we have a little different view. On the weekly, we had that similar action. We can see, as evidenced here, February and March of 2018, July 2019, and August and July, late again July, early August. We see an inability for price to close a weekly above these levels 1, 2, 3 times. That's important. When you're looking for a resistance or support on a higher time frame especially, I would ignore the wicks. You guys know that I do like using the wicks for smaller time frames. But when you're zoomed out like this, you really want to see the market close above that level. Or below that level if it's support, to confirm if it's valid. We got a lot actually going on here in this chart already. Right. 1, 2, 3, even I would say 4 touches here. So this for me is a very critical price level, and that's 11,500, pretty close to where we are now. And if you take a second and think about it, that makes some sense. We had this big rally this year, actually a huge rally from March. But even July, we had a rally up, and we suddenly seemed to lose some of that steam we had. It was seemingly pretty random. If you had been watching it, say on the hourly chart, daily chart, it's like, why is price stopping here? Well, if you zoom out to the weekly, we can see why. This is a pretty critical level. Every trade that is made, every move, every candle, up or down, there is someone, whether that's a person or a group or a robot, whatever, there's someone buying and someone selling. So when these areas start appearing, like the 3 we're looking at here on the weekly, these moves up, people were buying all the way, and then they were trapped. Price rejected. So now they have these coins bought at this level. Certainly some of them panic sell them off. You know, they got rid of them since so much time has passed. But every time we set a high or a low, there are trades that are trapped at those levels. And so because we see it 3 times here, we can pretty much assume that there's a hefty amount, or there was a hefty amount of trades that were stuck. Meaning, as price returned to that level, there were people looking to escape. So we had over a year, 3 separate occasions, maybe even 4 separate occasions where people FOMO bought. Some of them sold, but some of them didn't, and they were waiting for price to return there to sell. And that's essentially what creates that resistance, is people stuck in positions waiting to get out. And so, right on time, we see it happen. Price moves up to this weekly. I wish I would have hid these other ones. Oh well. Better. We see price move up to it. People start escaping these positions by selling as price approached that previous level. Now it's important, as we were talking about earlier, is the closes of this week. We have 1 day, 10 hours left in this weekly. And what I was saying is that we want to see the candles close. In order for this to hold as support, we want to see this weekly close above 11,530. If it doesn't, if we have the weekly close below this weekly support level, then we may end up flipping it to resistance. Because again, we've broken that support. And when supports break, they flip. Same with resistance. When these levels are broken, they change from support to resist, or from resistance to support. I'm going to zoom into the daily, because this is probably more relevant to a lot of people watching. We see potentially right here, from the 25th to the 28th, we see 1, 2, 3, 4 candles, all of which closed or opened at the same level, 1,000 or 11,132, 28, 11,328. I need to just start saying 11.3. That's going to be easier. if we zoom back, we don't see the same things really we did on the weeklies or the monthlies that we just looked at. We do see a little bit here in January, February 2018. We see kind of indecision, but we see a good amount of trading there. And then on March 5th, we see actually pretty close, or February, we see candles closing there and then reject. So the daily, because it's a shorter time frame, I wouldn't necessarily expect to see the same history looking back that we did for the monthly and for the weekly, because those are larger time frames. Daily is going to be a little more local. That's why I'm looking right here for a daily support. A daily close under this level I would expect to have this support broken, possibly turn into resistance and sell off. Because we don't have any other clear daily supports under there in the recent, I would look to the monthly, because we also don't have anything weekly really there. You could argue maybe down here at 11,000 we might have some kind of daily support, but I'm not imagining they're too strong. Now that we get down out of like the dailies and the weeklies and more on the hourlies, this is where it gets a little more interesting, and probably more interesting to you guys. We can find these support and resistance levels on any time frame. The shorter the time frame, the less likely they are to have an impact for long periods. You know, if you're on the 15-minute and you find a support, that's likely not going to be a huge factor in a swing trade or a long-term trade. So that's why we started with the monthly or the yearly and zoomed in, because now we have somewhat of a map here. We see the very important price levels for mid to long-term outlook on where BTC is going. And so now that we've somewhat looked into how to identify supports and resistances, I want to talk about how this can be helpful in our trades. So there's really two types of trades that you can try to make using just supports and resistances, and that's something I really like about them. I personally would say I use support and resistances more than anything else. Any indicator, any pattern, because they are very clear cut and they can make very successful trades. So there's two types. That would be range trading and breakout trading. So I'm going to get rid of all this. Okay. So range trading would be something like this. This might not be the best example because this is pretty choppy. But range trading would be the attempt to identify a resistance above price and a support below price. Ideally, you'd want to take longs at the support and close them at the resistance to go short, and then try again to close your long at the support or close your short at the support and go long. And so yeah, this really isn't the super best example because this is choppy. But really the point of range trading would be to take your signals from price bouncing off support and being rejected by resistance. I think there is a good example. I think back here it was actually a little better. Now, I'm just going to draw it. So, range trading, identify the resistance above, identify the support below, and you're going to try to long off support, short off resistance, long off support, short off resistance, etc. This can take a lot of patience. This is not going to necessarily be a fast, quick trade. but this is really successful, especially if you can resist the urge to go all in or all out on these moves and just use a small percent of your portfolio. This can be super effective because at some point you're going to get to the second type of trading you can make using just supports and resistances, called breakout trades. We can talk about that now. So we'll use this range. If you were looking to do a breakout trade, yo, John Shearing, thanks for following, brother. Good to have you here. The breakout trade would be almost the opposite. So likely you're going to see some of this ranging going on before, and the breakout trader would look to go long after the resistance was broken. So say, I guess we'd have to use up here for this. So say once 12,500 was broken, the breakout trader would look to go long to profit on the continuation up because resistance has been broken and now is not being held down by that price level. Or in the reverse, a breakout trader would look to go short. Let's say this like moves around, who cares? Would look to go short after the support is broken to benefit from the continuation that you would likely see afterwards. Now, this is not my favorite type of trading. There is a lot of people who do this. There are people that exclusively do this. I don't think there's necessarily anything wrong with it. It's just not my style. It could be your style. Would look for is they would be looking, instead of for the statistically more likely rejection off resistance or bounce off support, they would be looking actually for where resistance breaks or where support breaks. And so instead of the kind of range up down, they're going to be looking for a break of resistance to go long with attempt to ride continuation up. The reason I don't really like it is Bitcoin does not seem very kind to breakout traders. As you can see, if we followed what we're doing here, maybe we were long from down there, I don't know, but maybe took a short off of the top here, went long at support, went short at resistance, went long at support. And so now a breakout trader has missed pretty much all of these trades. 1, 2, 3, 4 trades, waiting for this, waiting for a break of the resistance. And so they go long, and we can see right here they got trapped. And Bitcoin does this all the time. Literally, same thing happened in June. Let me throw these on. It's real casually. I don't know. You see the same thing. Bitcoin's a huge fan of this. It likes to wick out. The price came down here. It likes to wick out breakout traders. That's why I'm not a fan. But it really is just the opposite of the range trade. The range trade is doing the logical, the statistically likely thing of going long on support and short at resistance, where breakout traders are doing long right after resistance breaks or short right after support breaks. I think that they tend to get trapped, and if not even trapped, they tend to get stopped out of their positions even on the breakout trade. Usually when Bitcoin breaks a resistance, you'll see a big candle, a big wick in the opposite direction, and then runs. I wouldn't recommend breakout trading to new people. I think that's something that takes a good amount of time in crypto to have an eye for, and even then, I don't think it's as successful. That you aren't using your whole stack. You know, if what I personally do is I look for these resistances and these supports. I'm just gonna make it up. So, well, I remember 10.5 was one, up to 10.7. Where are we? 1.77. You can't even see those. Okay. What I personally do is I'll identify these supports and these resistances. It's so much easier to just put on random ones and pretend these are right, because I don't have my history in front of me. So what I'll do is I'll take a small percent profit at each resistance. So for me, 1% would be still pretty large. I'll take maybe 1% here, 1% here on the way up. And then I'll take the profit, and then I will put a buy order down at the next support. These are made up supports. Mostly because I'm flustered now. Position management is really important when range trading. If you're all in or all out on these range trades, it might work for some amount of time, but inevitably price is going to break the support or the resistance and move on. And now if you're all in or all out, you're forced into being a breakout trader all of a sudden. If you're taking small positions and playing a range, doesn't matter what time frame it is, when price does break out eventually, you're not forced into the position of being a breakout trader. You simply have some profit, or you have some coin that's underwater, but with small percents, that's okay. You just have, it's a small bag, it's not something you have to force back in. And then what you can do is place what you obtained out of that order, whether it's fiat or Bitcoin, down at a support below. That way, if price starts going down, say you want price to go up, you already have orders ready. That actually happened to me. My personal thing. I was buying. Nobody was buying, but I was buying back here, and I sold small bits on the way up. And instead of trying to breakout trade, throw the profit back in on the way up, I just started layering them back down as buy orders. There was no guarantee that these were ever going to fill. But that's okay, because I only took small percents of profit. So on the way up, I was selling pieces, and on the way down, I was buying pieces. And that might not be as exciting for everyone as they would like. Pretty boring, but it's really successful. The success comes from being able to manage your positions and have patience. I filled a crap ton of orders at in the 4,000 range, and it was beautiful. I hadn't bought since back here. It was almost an entire year since I had a single Bitcoin buy order fill. 330 days. However, even if they had never filled, I was still okay. I did fill some in this area on the way down, some in this area on the way down. There was no guarantee I was ever going to have these really low ones, but I was insulated from price action. At that point, I had, I want to say, close to 20%, maybe in fiat, all just sitting waiting. And so if price went up, that was great. My portfolio went up. Felt like I was, making money. But if price went down, I was okay, because I had these orders below me. So I guess what you would call this, I don't know if this is necessarily range trading. Maybe it's like really macro range trading. Not a lot of people have the patience for that. And so I did again, take profit on the way up. And now again, I'm layering back down into these supports. They may not fill. I'm okay with that. I just have to live with having some extra fiat. It's not the end of the world. Word. All right. Well, let's move on, because it feels so stupid from this mic crap. I don't understand There must be some hotkey that I'm not aware of that I'm hitting. I don't know. Word. Alright. So today, after we had that hopefully good explanation, but now I don't know, of supports and resistances, we're going to take our newfound knowledge and we're going to look at some coins, see if we can identify those,